Have you wondered what financial advisors actually think about finances? This is your sneak peek at the conversations within Financial Design Studio. Michelle Smollenberger, the CEO here, will be your host as you go behind the designs.
Hello, everyone. Thanks for joining us for episode 55 of Behind the Designs. Today, we want to talk about how presidential election results impact your finances. As you probably know, Tuesday was election day, and I hope you had a chance to vote. The hard part with our two-party democratic system is that half the population's ecstatic while the other half may not be. But one thing we do want to point out is that the world continues to turn regardless of your political party's outcome. And as a reminder, this podcast is really just to share with you the conversations that we have behind the scenes here so that you can hear and see what we're thinking. Because when news like this comes out, when there is something that we don't know what's going to happen, we know that everyone's trying to absorb and understand what this means for the days and years ahead. So that's really the goal of today. We aren't here to promote either political party or agenda. However you feel about the election results, we want to talk about the practical impacts this election has on your investments and financial plans, both the good that you have to look forward to and maybe some of the things that we aren't sure of. There's something in here for everyone. So for this conversation, I want to bring Rob Stoll back to the mic. Welcome, Rob.
Hello. Good to be back.
Yeah, this is going to be great. This is kind of like the first real deep conversation we've had about this, aside from, work talk. So this is going to be good. I think everyone's going to enjoy it. I know I will too. So
Yep. We're touching the third rail, politics. Go figure.
that's what I'm like, we're doing it. We're going in. So just as a reminder, Rob manages all our investments as our chief investment officer. This means it's his job to watch the news, the markets, and adjust your portfolios to keep your investments protected. He is quite literally the professional who's most qualified to talk about the market in light of the election. We want to talk about a couple of things here. So we're going to talk about market performance, which impacts your portfolios, and then secondarily, potential policies that can impact strategies in your financial plan. So there'll kind of be two big pieces here. I think just to kind of get us started, one of the things I was really just hoping for in the outcome of the election is that election night or, soon after that it would be decisive, that we would know whatever way it was going to go. So that just, takes a lot of uncertainty out of things beyond uncertainty that, we may have of what really is going to happen. So I think that's something I can say I'm thankful for, is just that it was decisive. And so now we can kind of start to see what impact that might have. Any, big takeaway, Rob? Are you a person who stays up, watches election results late into the night, or no?
Oh, yeah. I was up for the whole thing. And, I had a different view than I think most. I think the overwhelming consensus going into election night was we're not going to know who won. It's going to get dragged out several days or weeks. I had a hunch that one way or the other, we would know pretty quickly, 2 a.m. being quick in this case, as was the case on Tuesday. But yeah, I mean, to your point, that is the one takeaway is we basically know what everything's going to look like, except for the House. The House is still undecided. It looks like it'll go to the Republicans, but I mean, we're talking about literally 1 or 2 seats, if that, and it's still only kind of 2/3, 1/3 odds that actually happens. So we'll have to see, because that does kind of change the calculus on some things a bit, but yeah.
Yeah. No, I just always think it's interesting to hear what people do. It's kind of like throughout the day you vote, but then you're like, okay, well, we have to wait till this evening anyway. So you go about life and then kind of check in. So yeah, I think it's cool. All right. Well, I know you've written about this, but just kind of remind us, how do elections typically impact market performance, kind of impact, that?
Yeah, definitely. So I've done a lot of work on this and just looking back in history, if you think about first-term presidents, the way stock markets usually work is you have decent returns in years 1 and 2, but year 3 tends to be a really, really good year if you look back over all the first terms in history. or at least over the last 100 years or so. And then usually the election year, year 4, it can be mixed. It's generally still good in line with averages, but generally it's kind of mixed. And this year, I mean, it has been a banner year all the way around. The S&P is up like 25%, which is way above kind of a normal year. And even the lagging parts of the market, like mid-cap stocks, small company stocks, are up mid-teens. Emerging markets are up kind of 12, 13%. So, I mean, there's been a lot of gains all the way around this year. Bonds are up, but not really as much as what I was hoping. But yeah, I mean, generally we've gotten kind of a really good year, which kind of sets things up interestingly for this, what could be termed a second term of President Trump.
Mm-hmm. Yeah. It's interesting because the terms aren't running back to back. So it's kind of one term and now coming back. So it's interesting. Do you feel like it can almost feel like another first term in that sense?
It could. Yeah, it could. But I mean, just the dynamics of a second term,
Mm-hmm.
he can never run again. So it's kind of, we'll get into it in a little bit, but, a little bit of a lame duck scenario. So, there is that. But because, there was a different president between his first term and second term, there is definitely a different flavor to this second term than we've seen really. I can't even, like, the 1800s, maybe. So,
Yeah, no, it's interesting. Well, I guess kind of, so knowing like historically kind of and this is probably everyone's reminder, stay invested regardless of who is in the White House, stay invested because markets do over time move higher. But kind of walk us through what's happened. So it's been a couple days. Walk us through. It's been a week, maybe by the time people listen to this, what's happened in the market since?
Yeah, so the market has reacted very strongly to this, at least here in the U.S. So if you look at the S&P, mid-cap stocks, small-cap stocks, I mean, there's been a very broad-based rally the last couple days, and I think that really stems from because Trump won with a GOP Senate and likely a GOP House, the prospect of tax cuts is certainly a lot higher than what it would have been if Harris would have won. So there is hope. If you go back to 2016 when Trump won and passed his tax reform, that was a very meaningful boost to company earnings. And stock prices are kind of based on earnings and fundamentals. So if people believe that those earnings are going to be higher than what they would have been, then stock prices will go up. So we've seen a little bit of that in the U.S. The international has been a little bit different. It's been, Wednesday was not good for international, for developed markets or emerging markets. Yesterday was a little bit better. Today, Friday, November 8th, it's not looking so good. And, again, I think that's because the market is pricing in, well, what does a Trump administration mean for trade tariffs and protectionism and, kind of trying to move manufacturing back to the U.S., which has to come from somewhere. So, you're seeing just a lot of, I'd say not great stock market returns the last couple of days in international. If you look back to 2016, we saw a very similar dynamic and it kind of turned around right afterwards. So I don't want to read too much into that, but that's kind of the initial market reaction.
Yeah. It's interesting when it moves so much so quickly. Like you said, this year, the market has done really well. So then to have, I think it's been the best week of the year in these last few days, that makes a really big difference on top of an already good market. So, yeah. So I guess when you kind of look ahead, thinking forward, what do you kind of expect from the market kind of under a Trump presidency over the next 2, 3, 4 years? Kind of global markets, maybe let's start there. What do you kind of expect? Kind of more of what we've already seen in the first week?
Yeah. So, kind of looking outside the U.S. to start, I do think it is challenging. I'm not going to lie. Europe was looking good over the last couple of years. A lot of their slow growth problems were at least temporarily relieved. But they're having a lot of problems, and it's kind of sad, to be honest. You're seeing Germany is really, their industrial base is getting hollowed out, and that's a quarter of the European economy right there, and they're having a lot of issues. The Ukraine Russia war certainly has hurt them because they're very dependent on natural gas prices, and that's been at least a little bit in 22 and in 23 was a big problem. So, I would say kind of Europe, I kind of look at that and I'm like, I don't know. That's not looking too good, particularly if Trump is more protectionist, even against our European partners. Other parts of the developed market world, Japan, I think will be fine. They're, kind of under the radar. They've been doing a lot of the right things. I think their economy is a little bit better positioned to kind of take advantage of protectionism if that is going to happen here in the U.S. And then some of our, the other markets like Canada and Australia are probably going to be fine. They're resources driven, and we still need a lot of resources to kind of power the economy. So, that's that. Emerging markets, the big question is, what is China going to do? What is that going to look like? And, we have in our models a structural underweight in China because, frankly, they just grew too big too fast and are going to have to digest this. They're trying to reform a little bit, but having Trump in office is really going to make life difficult, I think, for China. So China's going to face a lot of hard choices. They don't have a lot of room to maneuver. So, as much as the U.S., and I'm a big believer in diversification and in investing internationally and whatnot. But I mean, it really is, when you kind of just look at the cold hard facts, the U.S. just looks so much more attractive than a lot of these other areas right now. And I mean, that was the case before Trump was elected, but even more so after.
Yeah. No, I think that's really helpful, though, just to kind of dive into and see. So that's really helpful. How have markets kind of performed under similar administration? So when you think about, whether it's U.S. or global, whichever one, or both you want to comment on.
Yeah, sure. So I looked at second-term presidencies since World War II. So that is Eisenhower, Reagan, Bill Clinton, George Bush, and then President Obama. And if you look back at the stock market returns in years kind of 1, 2, 3, 4, in those ones, in those second terms, the first 2 years tend to be very, very good. So like kind of mid-teens type average returns, very, very strong. Year 3 and year 4 have tended to be not that great. So, whether that'll play out this time, we'll see. Part of the math there is during 2008, the last year of George Bush's term, the stock market fell like 37%. So that kind of drags the average down. But even if you look at a median, it's not that great. So what's interesting to me, though, is historically, the first 2 years look pretty good. The second 2 years of a second term, not so much. But just given how strong stock markets have been over the last 12 months, really, and especially this year, I do wonder a little bit whether some of those good returns in the year 1, 2 time frame have been pulled forward a little bit. So, I don't have any special insight on what the stock market is going to do, but after such a strong run and a lot of the issues that we still have to deal with, I wouldn't be surprised if returns kind of take a breather back closer towards normal or something for, next year at least.
Yeah. It's interesting. And I don't think this is the case, but a president, this is kind of just a reminder too, but a really good question. If, a president is in office to kind of set policy, kind of set, their theme on, where the country is going, policy, things like that. the market is kind of results of that, or looking forward to what do we think the results of that are going to be. So it's interesting that like the first couple of years, typically tend to do well. But I don't necessarily, or do you think that the third and fourth years are a product of what they do the first couple of years? I don't know that they are, because they're also forward looking to probably the potential of the next president. So is it ever really reflective of what the president is doing, do you think?
Yeah, not really, I don't think, because, I mean, again, looking back at Eisenhower, Reagan, Clinton, Bush, and Obama, you look at second term achievements, and really in all those cases, except for Reagan, there really wasn't kind of like major policy push through in those presidents' second terms. Eisenhower had a little bit. Reagan, the thing he had was there was a major tax reform in 1986. So that was very, very significant. But, you look at Bill Clinton did a lot of things in his first term, and then had some issues in his second term with a Republican Congress and some personal stuff. So he was kind of, didn't get a lot done in his second term. Same thing with George Bush. He had, 9/11 to deal with in his first term, did some stuff on Medicare to expand that in the first term, and second term didn't really get a lot done. Obama had his Obamacare, and that was kind of his signature in the first term. Second term was kind of gridlock. So, I mean, the usual cadence of the second terms, if you look back historically, is the president is kind of a lame duck. Everybody knows they can't run again. And, there's some midterm elections to deal with. But people in Washington position very quickly for the next election, knowing that there will be a new president. So that is, I think if you have to come up with a consensus for what Trump 2.0 will look like, some scope of gridlock or kind of being a lame duck is there. But, as we'll talk about in a little bit, I think there are a lot of things that could go against that consensus. So that's kind of the way it has been, though.
Yeah. No, I just think that's interesting. Yeah, kind of this cycle of what typically happens during presidential terms.
Yeah.
I think one of the things, whatever side you're on, it is a reminder, though, that, this is his last term, so he can't run again. So, however way you're feeling after the election, some of these facts are kind of just sometimes helpful reminders to say, okay, we know we have 4 years, but after that, we don't know. Mm-hmm. So I think that's helpful.
Yeah.
So I guess as far as really kind of the market, that's really kind of what we're thinking market wise. Hopefully that gives people, one of the nice things is if the market continues to move higher, anyone that's saving money and is invested will benefit in that. So if the market's moving higher and you are diversified in the market, then you will benefit. So, hopefully just a reminder that there's something for everyone. So if you're, in your plan, continuing to do those things year after year and the market moves higher, that you benefit too.
Yeah. And just one more thing to add on that. I think when you look at the U.S. Market returns over the last 2 years, really, they've really just been driven by, kind of what they call the Magnificent Seven, Amazon, Apple, Google, Facebook, companies like that. They have really been driving the market. Their earnings have gone up a lot as part of the whole artificial intelligence or AI revolution that's kind of underway. If you look at the rest of the market, so take the S&P 500 and take those 7 companies out and you look at the other 493, earnings growth has been really stagnant. I mean, there hasn't been a lot of movement on earnings for those companies. You look at mid-sized companies, small company stocks, same thing. I mean, earnings really are at 2022 levels, basically. So the rest of the market, surprisingly, as much as it's up, really has not seen a lot of fundamental earnings growth other than those Mag 7. So I think one of the hopes I would have is, if there is further tax reform, maybe cuts to the corporate tax rates a little bit. Going back to 2016, you saw a lot of the, kind of small cap, mid cap parts of the market do really well because they're much more domestic. And so tax cuts on the domestic side help those companies a lot more than an Apple, so to speak. So you could see a broadening out in performance, even though, it's all been good. I mean, they're up 15-20%, kind of these other parts of the market outside of Mag 7, but they could hold in or maybe do a little bit better than the top of the market.
Yeah. Have you seen that in the first couple of days, kind of this rally that we saw after the election? Has it been kind of a broad rally across different sectors?
Yeah, I mean, it's the funny thing. I mean, as soon as the election was called, at small cap futures, stock futures were up like 6%. So small caps were up 6% on Tuesday. They were up a little bit yesterday. They're doing decent today. So that is certainly what people are kind of trying to get ahead of is, okay, if there is further corporate tax reform, this will probably benefit small and medium-sized companies and even small businesses a lot more than it'll benefit Microsoft or Apple or Nvidia. So you are seeing that, but I always caution people not to read too much into early moves. You see it time and time again, whether it's a Federal Reserve interest rate decision or, some major news that comes out, that the initial market reaction gets faded. And, what seems conclusions you make during that initial move are, oftentimes wrong. So I think we just have to kind of wait for the dust to settle a little bit, probably through the end of the year and into the early part of January, just because there are other dynamics going on. Fund managers who are maybe underweight equities are going to want to try to catch up and make things look good. So maybe we get a Santa Claus rally, kind of regardless of what happened with the election.
No, I think that's just really helpful for people to understand because, these are all things we've talked about, written about, over the last year, 2 years. And so it's interesting. This is why it's, all of these things happen. Nobody knows what's going to happen. This is why you stay diversified so that when things change, you're able to benefit from whatever that is. So I think that's really a helpful reminder. Yeah, thank you for sharing that. I think that was really important. So if we kind of shift to, there's kind of a second piece, and it's funny because it seems like these are the same thing. They're so related. You have the market performance, but then there's policy detail and policy changes, and they affect each other, but maybe don't affect each other. So we're kind of separating them out here. But this is kind of the financial planning piece. So we have the investment piece, which is the market performance. That's how is my money growing? And now it's really kind of this other piece of what opportunities do you have depending on your income, depending on where you live, depending what tax bracket you're in. This is kind of the second part of tax-wise or, and other impacts too. How will these policy decisions kind of impact your plan and things that you can do over the next several years? Because I guess I say several years because when we had the last cuts during the first Trump administration, those did last for well beyond his presidency. So we're just now getting to where those would expire at the end of 2025. And so now we're kind of, so it can extend beyond this presidency. So I think this is why it's really helpful. So we're going to talk through these because I think it also helps people now to kind of have some type of clarity as we're planning. We were kind of saying, let's see what happens in 2025. Let's see what happens with the election. So this is our chance to kind of say, okay, here's maybe some insight into what we think will happen or likely. So I'll let you kind of start, whatever topics, that may be the one you want to start with.
Yeah, I think by far it's the Tax Cuts and Jobs Act that is due to expire, as you mentioned, at the end of 2025. Just to give some context, why is it even set to expire? It's because of a lot of congressional budgeting rules that says if you pass bills a certain way through reconciliation, I think it's called the Byrd Rule, if I'm not mistaken, the old senator from West Virginia, that you can't just add to the deficit indiscriminately. There are limits. So the way they kind of get around that to pass these things without a supermajority is they pass it along party lines, like 51-49, I think was what the Tax Cuts and Jobs Act was. but they have to set an expiration date, because when the Congressional Budget Office scores it, they're going to say, okay, it's going to cost X, Y, and Z for those 10 years, but then you're going to revert back and go back to normal after that. So that is the reason why we even have this in the first place, because that bill was passed not with a supermajority in Congress, so it wasn't made permanent. That said, with Trump having won this election, it would be absolutely shocking if that tax reform was not extended. I don't think anybody has any, doubt that he doesn't like taxes. He talked about it on the trail a lot with no tax on tips, no tax on Social Security, no tax on overtime. I don't know who would be paying tax at that point, but, the basic message was, tax cuts, tax cuts, tax cuts. So that will almost certainly get extended. We don't know all the different pieces of that. I would, my personal view, I would be shocked if the individual tax brackets moved at all, just because he is not going to want to raise taxes on kind of the middle class, so to speak. And if the tax cuts expire as scheduled, there would definitely be a middle class tax hike because of that. So I don't see that happening, but there's other parts of it, like the state and local tax limit of $10,000 for deductions, which hurt a lot of our clients in Illinois who have big property tax bills and, weren't able to deduct all that anymore. There is a lot of talk that that'll kind of revert back to the way it was before. So you'll, if you're an Illinois property taxpayer, you may see a nice benefit if that does go away. But, but a lot remains to be seen. It's easy to say, for Trump to say, hey, I want these tax cuts to go through. They got to be made permanent or, extended another 10 years. But, there are budget constraints to doing that. So, so that's kind of the big thing I would say. And then you get into other pieces like estate tax. The current limit before you get hit by estate taxes is pretty high. That would get cut in half if this tax law expires. That'll probably get extended again. So there are a lot of implications from this.
Mm-hmm. Yeah. Do you think, and is a way to kind of account for some of these tax cuts? So if they want tax cuts, one of the things that's been talked about, I guess, is Elon Musk, the Department of Government Efficiency, can you tie kind of, okay, we're cutting over here to make way for these tax cuts? I mean, is that a way to do it? But also, do the cuts have to be so big, because we not only have to stop the bleeding of our current deficit and the interest on that, so we would have to cut enough to make room for those tax cuts as well.
Yeah. Well, that is the $1 million question. So, that's why I say I don't have any doubt that Trump is going to want to extend these things, but how that is actually done is a question, because right now we're running fiscal deficits of $1.6 trillion a year, and which is 6% of the gross domestic product, which is, what our economy produces each year. You look back historically, we have never, ever, ever run deficits this high that were not either in World War II, they were that high, and 2008, 9, 10, coming out of the financial crisis, they were high. But you look in peacetime, growing economies, we've never had deficits this high. And if you do just kind of take his tax law, that Tax Cuts and Jobs Act, and you extend it, that is going to cost another $450 billion a year, which is, now pushes the annual deficit to $2 trillion a year and 7.5% of the gross domestic product. So, that's the $1 million question here is, how do you push through those tax cuts without, really freaking out bond investors? Because, we're basically printing money left and right now. And it's like, okay, what is that money worth if you just keep printing it?
On that debt side, the interest, if they did cut a lot of spending and they got that down dramatically, which, has been stated that that's the goal, would that maybe not automatically, but would that be a really big impetus for the bond market to actually start doing much better? If that just happened, they cut spending, and so now our deficit's way down, the interest is way down, does that automatically make bonds perform much better?
It should. I mean, you would think, but they have to be credible plans, I think. So, I think the bond market would look through a near-term increase in the deficit if there was a credible plan to right size the rest of the government. So, even if it's we're going to streamline defense, we're going to streamline health and human services, we're going to fix Social Security, like whatever it is. If those plans are credible in terms of, when the Congressional Budget Office scores it 5, 10, 20 years down the line, if those numbers look good, then I think the bond market will totally look through any near-term increase in the deficit. But, if those plans aren't credible, then, you just can't just increase the deficit without having a plan to kind of deal with it. I know there's a lot of kind of new economists out there, modern monetary theory, that say deficits don't matter, but the reality is they do, and they do because they cause inflation. So, a lot of the inflation problem we have had in recent years is because of just outlandish government spending. So it does matter. But yeah, I mean, I do agree, if there are plans, the market can look through that, but they have to be credible.
Yeah. No, that's helpful. So we talked about kind of the TCJA, possible elimination of SALT, expanded child tax credits. That's one I think that we kind of saw in that first package, but that's probably something, again, is kind of a part of those tax cuts. And then you talked about higher estate tax limits extended. And these are all things that, as we've been doing planning with clients, it's one of these things, if people are close to these levels, it kind of has been a wait and see what happens until the election to see if we have some insight into what 2025 will look like. That's been the nice thing, is that there's kind of this buffer year after the election and before the tax brackets change or reset back. So it's actually been set up really nicely so that we could see what we thought would happen. And I'm hopeful, and maybe I think we might see pretty quickly if there's going to be action towards extending those tax cuts. So I think that's going to help people in these planning opportunities to say, okay, yeah, it's pretty likely, or we know that this is happening. And that's just going to help people, again, it takes some of that uncertainty out. So now we know, okay, we have 4 or 8 more years of these tax cuts, which again gives so many opportunities to things like Roth conversions, things like that. So it's just really helpful.
Yeah. And I mean, that's I mean, you hit the nail on the head right there. I mean, Roth conversions, for a large handful of our clients, we have been advocating, let's get some Roth conversions done because tax rates are low, but we really have to kind of do as much as we can in 24 and 25, because after 26, those tax rates go up and the Roth conversion opportunity or the attractiveness of it goes down a lot. So, if and when these tax cuts do get extended, for a lot of people that are doing Roth conversions, that's a huge relief, because you can really kind of spread out the timeline that you're doing these Roth conversions, because there's a tax bill that comes with it. So it's not a costless exercise, but you can spread that out a little bit. You have a little bit more certainty on where, tax rates will be for the next several years. And that'll be kind of the interesting thing, to be honest, now that I, literally just thinking about this right now. If they're just kicked forward 10 years and instead of expiring at the end of 25, it's the end of 35, then, Roth conversions still look really, really attractive because the tax rates, are going to go up, or you think are going to go up at some point. If they're extended permanently, then, Roth conversions are probably still attractive in a lot of ways, but you're not facing this cliff, so to speak, where if you don't do them, instead of paying 22% today, you're going to pay 28% after the tax law lapses.
Yeah, and that's something I don't think we've talked a lot about today. So in order to make those permanent, basically they would need House and Senate to pass that, like both majority in both of those. Is that what you were saying?
Yeah, I mean, that would have to be a bipartisan bill for sure. I mean, they could maybe try to squeeze it. It would definitely there would have to be broad consensus on that. So, I mean, you go back to Reagan's tax cuts, and I'd have to confirm this, but off the top of my head, I mean, that was kind of a one and done permanent type thing. So, and, Reagan did that with a Democratic Congress. So if there is bipartisan effort to kind of, let's get tax policy where it needs to be, at least on a go forward basis, then yeah, I mean, that would have to have consensus. If there's not consensus on that, then, we are looking at cramming it through reconciliation again, and there will have to be a 10-year clock on it so that the CBO isn't scoring this thing terribly.
Yeah. Yeah. And I think that was probably one of the surprising things from the election. I think so many people were focused on the presidency and, which way that was going to go. But to see the Senate, flip Republican, and then the House had a small majority. So now we're kind of still waiting to see, I think, just all three branches. I think that was something not many people were probably thinking about before. So it was, always kind of this, we're going to have these checks and balances. So I think that was something I was surprised about, which can make a big impact in some of these policies that are potentially going to get changed. So I think that was something interesting that came out of the election that probably not many people saw happening.
Yep.
So one other thing, I think, you had mentioned that we haven't talked a lot about is just kind of student loans. When we talk about policy, this may be one that, if the others are, everyone benefits if you're investing and saving, this may be one that people don't, get excited about. Talk to us a little bit about student loans, because this is really an area that you focus a lot on too.
Yeah. I mean, just very quickly on student loans what people need to know, and I know a lot of people don't, deal with student loans, but I mean, the federal student loan system is in absolute shambles right now. So, I mean, we have like 1.8 trillion of federal student loans out there. The repayment plans that borrowers can be on have changed time and time again. They're not even loan repayment plans in the kind of common way of thinking, where it's like, okay, here's what you borrowed, here's your interest rate, and here's what you need to pay it off in X number of years. They have all these income-driven repayment plans, which in a lot of cases, the payment is so low that you would never, ever pay it off with the interest and everything. So there's been a lot of effort by the Biden administration for the last 4 years to push student loan forgiveness. He came up with a new income-based repayment plan, which is really attractive to borrowers. That has been challenged in courts. There's an injunction against it. And, it's just, there's going to have to be a major reboot. If Harris had won, I think it would have just been a muddle along. They'll kind of fudge things to kind of keep the system going. But with a Trump administration in charge, I strongly think they have to just kind of look at the whole thing top to bottom. So it's probably not going to be as attractive to borrowers going forward. Not that the people who already borrowed are going to get hosed, because in a lot of these cases, people get grandfathered in. But yeah, it's just, there's so much uncertainty right now. Our youngest daughter is applying to college. I'm looking at having to fill out the FAFSA. It's not even ready. It's usually ready October 1st. It wasn't available until June during the last FAFSA season. They're saying December this year. I mean, the whole thing is just in shambles. So, that's probably more than people want to hear on student loans and whatnot, but it is the reality. It's a big issue, and it's a big number as well.
I think it may not affect a lot of people who are retired, or have paid off student loans or paid for school outright, but it could affect a lot of people's kids, grandkids. So I think it's definitely something, in a lot of people's plans of, do I feel like I should help out? Should I give something to my grandkids, to my kids? I think it's absolutely something that, and we've talked about this in past episodes, ways that you can help and build, that up, because the education system and paying for it has changed so much over the years. So that's another episode we did. And so I do think it's, helpful for people to hear.
Yeah. And OPS, I mean, it's worth a couple $100 billion in the budget. So again, if you're looking for how are you going to pay for tax cuts, reforming the student loan system is probably near the top of the list of how you do that.
Mm-hmm. Yeah, no, that's helpful. Okay, so now let's talk about kind of some of these kind of second term initiatives. We've kind of talked about a little bit policy, some of these planning things specifically. What do you kind of expect maybe to see just kind of in his second term, some initiatives we might see?
Yeah. So, I mean, the tax stuff is clearly priority number one, but even beyond that, you kind of look at what Trump and people around him have been talking about. Infrastructure is a very big thing, and it's becoming a bigger and bigger issue because of the AI revolution and the power needs for that. We simply don't have enough electricity generation in this country to be able to run these AI models efficiently, or, frankly, if everybody's going to own an electric vehicle, an EV, we don't have enough capacity for all that. So, if you look at what Biden did with kind of his Green New Deal, which is called the Inflation Reduction Act, a lot of that infrastructure spending was really focused on renewables and things like that, less so on nuclear and especially not fossil fuel type investments. So, I think a Trump administration is going to, pull the proverbial plug on that a little bit and refocus a lot of that infrastructure spending on oil and gas exploration, nuclear build out. We haven't had nuclear build out here in 50 plus years. That is the obvious solution to our energy needs. It's clean. And you can get a lot of bang out of your buck from that. Grid hardening. And what that is, it's just looking at, it's burying cables. So a lot of the power lines you see are vulnerable. So there's a lot of effort to kind of stick those underground. J.D. Vance gave an interview to somebody, I forget who, where he had a really interesting talk about the vulnerability of our power system here in the U.S. and how there's like no backup system. If one part of it goes down, there's no way to kind of offset that. So, there's a lot of investing to kind of do there, he said. And so, I mean, there's, I would say infrastructure is kind of, it might be kind of taking that infrastructure spend out of one pocket into another. So it's not necessarily new spend, but it would be, I think, a little bit more focused on addressing the real needs that we have.
The second one we're going to talk about, this is kind of the big one, Social Security. What's going to happen to my Social Security benefits? And what's interesting is these are not tied at all to spending because they are in a separate pot, not to be touched when, needed or, anything like that. Touch on that a little bit. Social Security, what do you expect? We know it needs reformed. Are we going to see that, do you think?
Yeah, and this is just me talking. This is not like consensus at all.
Yeah.
High level Social Security, the trust fund is going to run out in about 10 years. And at that point, what that means is if nothing is done to shore up the system, then Social Security benefits will get cut about 25%. So that is clearly not a scenario that anyone of any political stripe wants to see happen. I put 0% odds that that'll ever happen. The only question is, when does it get fixed? I think, the consensus and the obvious answer to that is it will get fixed at 11:59 p.m. the day before it's going to run out. Like that's just the way Congress has worked for a long time, where they just wait until the last possible minute to do something about it. I think there is potential, though, as part of, we'll get into this a little bit more, just government reform and, tax policy and kind of right-sizing other parts of the government. I think a positive surprise could be that Social Security is kind of put on solid footing during the second term. The reason why I think that is because it has to get dealt with at some point. And, if I'm President Trump and I'm looking at my legacy, he got his tax cuts in the first term. If he can get out of his second term saying he, quote unquote, save Social Security, that's a really big deal.
Yeah.
And, I don't think we should ever minimize how presidents think about their legacy. They want a good legacy, and they want to have signature things that they can point to after they're gone. So I think, it is possible that Social Security does get shored up. I don't know what that would look like. That would almost certainly, in my mind, entail higher payroll taxes, because they're not going to cut benefits. And, I don't really think they're going to raise the retirement age either, because the life expectancy from the last major reform in the early 80s to today is up a couple years, but not the same amount that it was from like 1935 through 1982.
Yeah.
The last time it was reformed. So I don't see like that happening, but there will have to be some, either higher payroll taxes or the wage limit, which is, currently under $200,000.
Yeah.
That could go up so that more people, high income earners, are subject to that. So, again, this is highly speculative on my part, but, I think Social Security would be an obvious, if I'm in Trump's shoes and thinking about my legacy, that would be a very obvious thing to kind of try to fix.
Yeah. Well, politically speaking, one of the benefits could be you set your party up really well, that in the future they don't have to deal with this come their reelections. And that works for both sides, Republicans and Democrats. You're not going into a reelection or an election for those House and Senate seats coming off of something bad done or not done, and now promising to fix it when you're one of a group, trying to get something passed. So it could actually set, and this is the political part of it, it could actually set, if he's wanting to set his party up well, that they don't have to battle through that in the future. So it's interesting. Yeah.
I mean, it's really frustrating because, both sides accuse the other of wanting to cut Social Security. It is never, ever, ever, ever going to get cut, ever. So, it's just like, can we be adults for 2 seconds? It has to get fixed. It has to get shored up. Let's just get it done. So, it takes political will to do that, and willingness from both sides to do that. But again, I think, that is potentially possible in a second term for Trump. If not, certainly the issue gets kicked to like 2032 or 33, and then, right at the last second.
Yeah. No, that makes sense. So let's kind of shift a little bit. So these have been kind of what we think we'll see. Let's talk about some challenges. So kind of key challenges to, this term maybe, or things coming up. What do you see as some of those?
Yeah, I mean, definitely the biggest challenge that we face right now is the budget. I mentioned it before. The budgets we're generating right now, you've just never seen during peacetime and growing economies. Like, never, ever. The worst you ever really saw was a budget of maybe 3% of gross domestic product. I mean, we're double that right now. And that's with unemployment rate in the low fours, GDP growth and, kind of the 3% range. I mean, it's unprecedented what we're seeing right now. And bond markets, if you look at bond performance the last couple of years, it has been pretty bad. And yes, we came off extremely low interest rates in 2020 and early 21. So that, obviously had an impact on that. But I mean, bonds are increasingly sensitive to this issue of, well, what is going to happen with the deficit? And one of the key reasons for that is because the interest costs, as interest rates have gone up, the cost of servicing the debt has just gone vertical. So if you look at what we're having to spend just to pay interest on debt, it's higher than Medicare, it's higher than defense spending, it's coming up on Social Security. I mean, it's just outrageous how much money is being spent on interest right now. So, I think the big challenge that any initiative is going to have, and really the biggest challenge we kind of face right now, is what do you do with that budget, and how do you do that in the context of where interest rates are? Because interest rates, you can say, oh, well, just cut interest rates and you'll cut that interest cost for the deficit down. But if you start cutting interest rates, inflation can get reignited, and then you have that's a big political problem itself. So there is a dance going on between the budget and interest rates, and how that gets resolved in a credible way, I think is really going to determine what actually does get done in the second term.
Mm-hmm. Yeah, I think that's one of the interesting things, that all of these kind of work together, but yet the Fed is supposedly separate from, the government. So they are not supposed to tell each other what to do. There's, already talk about that. But that's the interesting thing, is that they're all kind of separate, but yet intertwined in how they impact each other. So, and I think, even in a home budget and a family's budget, if you're running at a deficit, first, you have to get it back to neutral. You have to get it back to where you're actually break even. And then you work on, okay, now we can spend less so that we have, a surplus. So it's really kind of two big steps just to get, the interest payments down and then to get to where it should be. So it is, like you said, a lot of work, because those are really big numbers that we're dealing with. So
yeah. And again, I mean, when you look at the fact that Social Security costs are kind of on autopilot, Medicare, the way it's structured right now, is really on autopilot, and defense, you try to cut defense and everybody starts screaming that you're weak and you're going to get overrun by China or whatever it is. And so it's like, that's why this issue is so big, because the obvious places to kind of go after to rein that spending in are quote unquote untouchable. So, how do you do this? It's like, for all the talk of like, oh, we're going to shut down the Department of Education or whatever it is. It's like, oh, congratulations. That's like $20 billion a year. So not going to move the needle. It's, you need wholesale kind of reform of the government to kind of get that.
Yeah. I think one thing that hopefully, I'm hopeful about is just bringing together people from different sides. I think that's hopefully one of the things that people are encouraged by is, yes, President Trump, but he has pulled in people, liberals, Democrats from the other side. So I'm hopeful that, even just listening to those ideas enough for them to say, yes, get behind this man. I'm hopeful that all of them kind of working together is going to bring about solutions that everyone can agree on. So we'll see, that all has yet to be seen, but hopefully that gives some people some optimism that maybe we'll see that. Another key challenge, I know you've kind of mentioned, is tariffs. We did see those in the first administration. So let's talk about that a little bit.
Yeah. So that's, Trump has been extremely vocal about, wanting to get manufacturing back here in the U.S. And the stick that he wants to use is to impose tariffs. And, the consensus amongst economists is, you impose tariffs and that's going to create a lot of inflation and issues. And there is some aspect to that. I remember when Trump put on steel tariffs. I have a friend who's a welder, and he was telling me steel prices are going through the roof because there's all these tariffs on it. So and he's passing that cost along to his customers. So I mean, there is some of that, but I do think, and I at the risk of kind of stepping over my area of expertise, as I've really read through some commentary from people who are actually in logistics. The tariff issue is probably not going to be as big in terms of an inflationary problem as what kind of the ivory tower economists are saying. There are a lot of offsets, because the reality is companies that are importing at much lower prices than what consumers are getting. So if you throw a 10% tariff on something, that's not increasing the end consumer's price by 10%. It's by a fraction of that, because the tariff gets paid at the time that good is brought into the country. Yep. So it'll be, it'll be something we just have to kind of watch and see. One positive kind of spin I've seen on how this might be approached is Trump will announce tariffs, but he'll give like a 2 or 3 year window to a lot of these places, like build manufacturing here in the U.S. and you'll avoid the tariff, and we'll give you 2 to 3 years to do it. And, then you avoid the tariff. And if you don't, then, in year 3, the tariff is going to go through. So I think we have to kind of wait and see. I mean, there's a lot of like negative stuff on the airwaves about tariffs. I'm not personally concerned that it's going to lead to another round of inflation or anything, but that is certainly something that's out there.
Yeah, no, I think those are great, just reminders. So we'll end with this section, another kind of main section. What makes this second term unique? We kind of talked about how, he had a first term, but then had a break, and now this is his second term. They didn't run back to back. So what makes this unique?
Yeah, so it's, and I'm going to kind of paint a blue sky scenario here. I am an optimist, and as much as history tells you not to believe in good things happening in Washington, I like to believe that is the case sometimes. I think the biggest thing, like if I was to paint a blue sky scenario for what this second term could look like, is that there really is a unique coalition, I think, that we have not seen in prior second terms. Maybe Eisenhower had it, but you go, and Reagan to a certain extent, but you look at Clinton didn't have it, G.W. Bush didn't have it, Obama didn't have it. And, but you look at kind of the coalition that this round or this election is a lot different than what it was during the 2016 election when Trump first ran. So back then, it was Make America Great, the MAGA movement. I mean, that was the movement. You look at this year, it's really kind of an eclectic. You have the MAGA movement, yes, but you've had a lot of, historical libertarians, a lot of people in Silicon Valley, they tend to be libertarian and kind of hands-off, laissez-faire, Elon Musk being a great example of that. But there's a lot of other people like that as well, kind of in business, out there doing things, and, really focused on efficiency. So you have that is kind of under that fold, but you also have what I call, the Kennedy Democrats, which I refer to them as Kennedy Democrats, because if you go back to the 50s, 60s, and early 70s, the Democratic Party was very, pro-America, pro-middle class, but certainly a lot more focused on social issues. And if you look at some of the other people in this kind of coalition, this unity government, as they like to call it, you have Robert F. Kennedy Jr., who was originally running as a Democrat and got kind of boxed out of that, ran as an independent, and then eventually joined this coalition. I mean, you have him in there, you have Tulsi from Hawaii is in there, and several, a couple other kind of historical Kennedy Democrats. So you'd say, 20 years ago, these are solid blue dog Democrats all the way. They're part of this coalition. So, when I kind of look at, what could really go right in this second term this is not just Trump and his MAGA minions kind of charge it, bull into a china shop, we're going to blow things up. I mean, there is, I think, a very broad consensus out there right now that the federal government is broken, it needs reform, and that we're running out of time for that reform, really because of these deficits. And you have a group of people in there, and, you look at Elon Musk. I know a lot of people don't like him, and I know, there's a lot of things he does and says that pisses people off. I get it. But, you look at what this guy is doing in space exploration. I mean, he's running circles around NASA on a budget that's like a tenth of what NASA spends each year. And, it's just like it's him and it's other people who are kind of out in the industrial, kind of industrial America doing things that if they do kind of, join this Department of Government Efficiency, as they're kind of coining it right now, if you get enough of those people like that in there, then, there could actually be some significant government reform, which would be massively bullish for markets and bonds and stocks. So, it's very blue sky. I get it. Chances are probably less than 10% of that happening. But, I think if there's a time to believe that something like that can happen, this is probably the first time in 30 or 40 years that we really have a shot at doing that.
Yeah. Yeah. I think something too that you've kind of mentioned is it's kind of like all levels of government are on the table. So, it's not just the presidency, and that's something we've kind of been talking about, but some of these obvious areas like healthcare and defense, kind of streamlining that, reforming it at all levels. So,
Yeah. Yeah. And I mean, there's really, so what are the markers that I'm looking at to kind of indicate whether this blue sky scenario can happen or not? I'm really looking at 3 cabinet positions, looking at the Treasury Secretary, because whoever that is going to, they have a lot to deal with because we are issuing a lot of debt each year. And the Treasury Secretary is a very important part of kind of getting the market to buy that debt. So, Treasury Secretary, Defense Secretary, because like it or not, there are a lot of inefficiencies in the Defense Department that needs to be right-sized to be part of that solution. But you need somebody credible in there. You don't need a bureaucrat. You need somebody credible in there that can get in and actually execute something like that. And then the third position that I'm really looking at is for the Department of Health and Human Services, because, that is kind of the third big piece of the puzzle here in terms of Medicare spending and just healthcare spending overall. It is a big number. And, anyone who, has gone to the doctor or hospital or, needs to have stuff done, you don't have to be a Republican or Democrat to realize that it is an extremely inefficient and overly expensive system. And it's way more complex than I would ever know how to reform. But again, kind of like defense, if there is somebody credible who can get in there and really start to kind of look at where can we, kind of streamline and make things efficient, then, that would be an indication as well. So, kind of like Treasury, Defense, Health and Human Services, as we kind of see those nominations come out, I think that'll be the biggest indicator of whether, the Trump agenda or this, kind of Department of Government Efficiency can actually happen.
Mm-hmm. Yeah. Even people just paying their health insurance premiums and may or may not need it, but even just how much they're paying, like even those people, realize that something needs to be changed. Yeah. So, yeah. I think one of the interesting things that as I've thought about, I think any leader who's saying, okay, now I'm stepping into this position, there's, especially for a president, you're running on all of these policies, you're running saying you're going to do these things, and then becomes the reality of, okay, now what do I do? Now you've been put in this position. And I think that's something that to take some of the uncertainty out from, the days ahead, and the market does not like uncertainty. So I think these will hopefully be helpful, but I think we're already starting to see kind of like, okay, day one, here's what I'm doing, or in the first days, here's what I'm going to do. And then from there. So I think one of the things, I just think of is I think we will start to see things quickly, which will start to give insight and potential, seeing action taken, or at least the direction we're headed. So I'm hopeful that that's going to help kind of give insight early on to people so that we know where we're headed. The other thing I think about too is just, like you said, these positions, the people that have been kind of a part of this coalition, what's hopefully encouraging is these people have been thinking about these things for a long time. So you have, Robert Kennedy Jr. running on a platform of wanting to make America healthy again, like that. He was already thinking about this, already wanting to make that one of his priorities. So now put into a group of people who have other priorities, it really does kind of make this well-rounded group. And that's at least encouraging. It's not someone stepping into this position saying, okay, now what do I want to do? They've already been thinking about this and saying, this is what I think is really important. So whether we see that, that's what nobody knows what tomorrow is going to bring. But I think those are the things that hopefully are encouraging or give us, that reason for optimism if there is going to be. So that's what it'll be interesting to kind of look for.
Not to throw cold water on everything I just said a moment ago or what you said. The political reality is getting to that blue sky scenario would probably be chaotic. I mean, we do have a kind of a federal Borg out there that is just so big, so massive, and there's so many vested interests that need this system in place. They're not going to just lay down and go away. If that is the direction they're going, even if you get the right people in there, there is going to be a lot of pushback, and it's really, really difficult to predict what that would look like. And it could be ugly. I mean, you just don't know what it looks like, what that could look like. One of the books I read a long time ago that, I think is interesting, not a perfect book by any stretch, but by the author Neil Howe, The Fourth Turning, where he really looks at, go back hundreds, thousands of years in history, and there is kind of this, semi-regular cycle every 80 years or so, call it, where a society will go through a very tumultuous period of change. And then, through that, kind of a new way, in a positive way, a new way kind of emerges. And, if you read the book, I mean, he wrote this, I think, in the late 90s. But if you read the book, I mean, he talked about kind of the 2020s as kind of being the epicenter of that. Because if you go back 80 years from now, we went through World War II. If you go back 60 to 80 years before that, it was a civil war. And if you go back 80 years from that, that was the American Revolution. So, we have actually seen these kind of 80-year cycles happen here in the U.S. And in all those instances, it was a really, really chaotic and, at sometimes very dark transition from the old way into a new way. My hope is, the experience of the last 8 to 10 years was bad enough that maybe that counts as that tumultuous period, and we're kind of we're going to emerge from that. But, I do think that if there is truly a push to streamline government, there's going to be a lot of forces within government to push back against that, because frankly, a lot of people's paychecks depend on it. And, we'll see how that turns out. But that would be kind of my caution with all this, is the blue sky may come, all the good things and all that, but there may be a couple year period where there's a lot of chaos in between.
Mm-hmm. Yeah. Yeah. And I think that's really kind of how, when we're thinking about these things and how they impact clients, you have to be able to see both sides and the potential of what can happen, but also what can stop things from happening, or, cause things to happen differently. And I think that's where, in all of these things, as we talk about the Tax Cut and Jobs Act potentially expiring, things like that, you have to be careful not to make all these rash decisions, act quickly, do things that you wish you wouldn't have done. Because when you do those things, if we're just talking about estate planning, you could set up all of these things that you might be thinking, well, wait, I didn't want to retitle those things to be out of my name. Now I can't take those assets back. So it really has to be tied to your goals and what it is that you are trying to accomplish, where you are at, what state you live in, what matters to your family, the future generations and existing. So I think, it just is a reminder of both of these ways that we have to think about things. We have to think about both sides and the potential for the what ifs in either direction. So I think it's really helpful just to say there's hope, there's optimism, that we always want to have that. That keeps us moving forward, but also just a reality check a lot of times of, okay, there's a lot of levels and layers within each of these pieces. You just take one of them, healthcare, there's a lot of details that have to be figured out in order for people to see that now in their pockets and actually at the doctor, and to see that impact actually take place. So I think it is just a really good reminder and reality check of, we want both. We want that to happen, but we also want it to happen in light of and be done wisely, so that, it affects everyone. The outcome is really positive. So, yeah.
Yep. Yeah. And that's the funny thing about investing is, as much as people will talk about politics and this and that, at the end of the day, it's really driven by fundamentals. Like, what are the earnings of these companies doing? And, I've looked at this a lot recently, just to, you explain why are the Mag 7 doing so well? Well, it's like their earnings have gone, through the roof the last couple of years. So the stocks have gone through the roof. Why haven't small cap companies done as well? Well, their earnings are stuck from where they were 2 years ago. So, to your point, I mean, there's a lot that goes on, but you got to focus on your individual goals and, not lose sight of what really matters. So, I mean, it's your personal goals, the things you want to do in retirement or send kids to college, things like that. But even from an investing standpoint, it's like, just, don't lose sight of what's going on with the fundamentals, because at the end of the day, that's what really drives things.
Yeah, no, I think this has been great. Yeah. Also, at the end of the day, when we're investing for clients, we're investing so your money is there when you need it. So for us, it's very important to think about how these things impact the market, how they impact financial planning opportunities, because we could easily say, we want to take a bet on this or that. But that isn't making sure your money is there when you need it if it doesn't work out. And so for us, it's being very disciplined, having a structure in place that we can actually systematically rebalance. And it's there, it happens regularly, and it's just repeated over and over. So I think it's really helpful for people to hear, just some of this background. So yeah, well, thank you so much. Anything you want to share, kind of closing thoughts? How do you want to leave people?
I mean, there's a lot here. I just, I always have a little trepidation doing these things and, making these big predictions and all that, because they'll probably turn out wrong. But, I'm an optimist, and I think you just kind of have to be an optimist if there's ever going to be positive change, because if you just believe that things are stuck in the way they are, that's exactly what you're going to get. So, I would just encourage everyone. I know it's a tough election for a lot of people, and, but there is another day. We've gone through a lot of this in the history of the U.S., and stocks have generated 9 to 10% returns, and bonds have generated 4 to 5% returns over decades and decades and decades. So, I would just remind people not to let emotions kind of guide the reality of just the day-to-day things you need to do.
Yeah. Well, thank you so much, Rob. I feel like this has been so helpful. I know I've enjoyed it because I always enjoy talking about these things. So
yeah, no problem. Love it.
All right. Well, with that, our episode comes to a close. Thank you, Rob, for sharing your expertise and perspective with us. And thank you for listening. We post new episodes every other week. You can subscribe to our podcast or follow us on social media so you never miss a conversation. And we'll talk to you in the next episode.
Thanks for listening. To find any links or resources related to this episode, check out our show notes. Your host was Michelle Smallenberger, a certified financial planner and CEO. The guests featured are from Financial Design Studio, a team of experienced, fiduciary, fee-only advisors based in Chicago. Anna Lewis is the executive producer of the Behind the Designs podcast. And as always, for more information about Financial Design Studio and who we are, check out our website, financialdesignstudio.com. And final note, no content discussed on this podcast should be taken as financial advice. Financial Design Studio accepts no responsibility for your individual choices. We'll see you in the next episode.